Welcome back to the channel. So we got a bunch of stuff to cover today, once again with GME, because we had a pretty big update today, which is Gill, or deep fucking value. He actually managed to exercise some portion of his options. We're going to be discussing what he did there, how many he exercised. But first, let's kind of walk through the day. What really happened throughout the day today? And I'm going to bring over the charts here, and I'm going to point out GME is on the left, and we have the option. This is the $20 option, by the way, that he used to own. And notice just about here around 11:30 or so, just as the shareholder meeting actually was about 30 minutes past the shareholder meeting, which was ended up getting delayed altogether. But in the midst of that delay, it looks like he started dumping his options once again. You can see the volume coming in here, right? This is just about at 11:30 or so, which if we also put that on the chart, we could also see this downswing that was occurring just as these options are being dumped. Again, massive volumes, 5,000 in this minute. 5,000 again, 5,000, right? 5,000, 5,000, right? Very, very similar to yesterday's action when I showed it to you guys where he was just dumping 5K at a time. Once the dumping essentially stopped here at 11:42, which is, yeah, it's the bottom of this right here, right? 11:42, just about here, right? So once we saw the options stop getting dumped, that's when we saw price go right back up again. Which again goes to show you, just going to kind of drill this in here is, people like to kind of walk around and say that these options were not hedged to begin with, but that's not the case here because we're seeing these options being sold back to the market maker, and then the market maker subsequently ends up getting rid of the shares that were purchased previously back in May to hedge his position, and added to depending how they were delta hedging it and so on. But that caused this initial drop that we saw early in the day, right? And yeah, price ended up recovering very, very nicely. And then we are going to head over to his Twitter. He puts out this tweet here. I'm sure everybody's watched it already. I'm not going to watch it twice, but there's two main characters here. There's one person that puts some sort of grenade into the sand, ends up blown up, and there's like a big ripple effect through the desert, and there's this other character that tries to like hang on while like this massive sandstorm is coming through him, and he manages to hang on, and all the people around him are cheering him on. You've seen it. I saw it. So the way I interpreted this video, by the way, is the person that puts that dynamite, right? We can kind of bring him here. Where's this guy here? The person dynamite. I'd say that's Gill. The dynamite itself are his options. The options that he had to inevitably sell. The person hanging on for dear life, that's GameStop, the stock itself. The people cheering, the shareholders. That's the way I took it, because when Gill first put the position on and he made it public, a lot of people on Twitter, social media were talking about the fact that, hey, there's so little liquidity here. What's going to happen? He can't move this without everybody knowing. All eyes on him. He controls the vast majority of the open interest. What's going to happen once he has to sell them? Well, the stock kind of kept things together. I mean, let's be honest here. I mean, it swallowed up the majority of the sells, right? He was selling today. He was selling yesterday. Was there a drop in the stock? Of course there was. I mean, we saw it on the chart, right? Today there was a drop. Here we go, 11:30. Yesterday, towards the close, where is this? This drop was also because of him. We looked at those options. They were coming in right then and there. But the stock managed to hold on. I mean, after he even sold a batch today, after he managed to sell a batch today, what was the stock price at? It ended up bouncing back to the $27 mark. I mean, again, so I can understand. This is back when this is about the time he put the video out. So I get it. I mean, they could have gone two ways. He could have gotten rid of his calls. They've been on social media about it, and then people could have been dumping their shares, and GME would have dumped under $20. In some alternate universe, that could have happened. It didn't happen. GME stayed at $28. That's the way I interpreted that video. Fast forward, market. First of all, right before the market closes, we do have this massive move higher, as we can see here, from $27 to $29, $2. It's a remarkable move here. 7% move. The market closes. We see this next candle up here. This was him actually posting his position, his updated position, which, as we take a look here, is now this. This is what it currently looks like. 9,000,001 shares is what he has, a $23 average cost. There are no longer options here. He has less cash. His previous cash was 29 million. Now he's down to 6 million. I did the math here on the side as to what could have happened to everything. So from what I can see, he used that cash that he had, right? 29 million down to 6 million. He used that portion of cash to buy 1,000,000 shares. That's what my math looks like. If he bought 1,000,000 shares, then he was buying it during this ramp up here. Based on the average of that 1,000,000 shares and that cash that was used, it would have been during this ramp up. So this tells us that this ramp up was somewhat caused by him too. Now, some people might say, well, look, the volume here is, well, on some of these candles, it's like 200,000. But I'm sure if you add up all the volume, you know, between all those bars, you might say, well, that's more than 1,000,000 volume there. You know, how can you say that was him? Well, listen, obviously, you know, when he's buying this and his algos out there and his other companies out there and they see someone big coming into the market and spending tens of millions of dollars buying shares right this moment, guess what? So algos are picking up on this and they're like, wait a minute, maybe someone does know something, okay? Maybe something got leaked. Let's piggyback on this. So all of a sudden, that 1 million volume ends up being 5 million volume entering the market as they're piggybacking on that initial 1 million volume that's coming in, okay? That's what can lead to this quick uprise that we saw into the close. So a million shares, as I said, 1,000,000 shares came from his cash. From there, we also know that yesterday he sold about 50,000 of his contracts. So 50,000 contracts yesterday he sold. Today, I am estimating that he sold about 40 million contracts. The volume for today was also above 40,000 on that contract. Where is it here? 48,000. I believe that he's responsible for 40 of that, 40,000 of that. That means if he sold 50 yesterday, 40 today, that means he sold 90,000 contracts altogether, which means there's 30,000 contracts left. And I believe that he then exercised those 30,000 contracts for 3 million shares, which I think it might have actually been, well, what is it? I think he ended up with 30,010 contracts. That's what I believe he actually finished things off. It wasn't perfect, which is why he has 1,000 extra shares. I did notice earlier in the day when he was selling, there weren't a 5,000 block order. I wonder if I took a screenshot of that. I'll add it to the screen if I did take it, but it almost did seem like someone was trying to break up the order into more random pieces in the very beginning of the day because it was still a substantial bunch of thousands of contracts, thousands of shares bunched together. But so I believe he exercised about 30,000 contracts altogether for 3,000 shares. Now, I believe that he actually lost about $500,000 from exercising his options. You typically want to wait as long as possible to exercise them. Otherwise, if you do it too early, you give up way too much of the extrinsic value on the option. I'm going to explain. Let's look at the option chain. See, it's $20 here, right? The option, the stock price finished at $29.12. Okay. That means out of this $9.25, $9.12 is intrinsic value based on it being in the money by that much. But 0.13 is extrinsic value because there's still time left in the option. Things can still fluctuate. There's maybe some level of volatility still priced into the option. Well, if you could even look at the mid price. The mid price would be like 9.27, so you might even get some takers there from the market makers. But he had that option, pun intended, to sell his options, let's say, at 9.25. Now, I get it. When he was transacting, all of these prices were different, but the premise was still the same. The idea was that the options were still worth more the way they were than they were if you were to exercise them. In this example, just to show you how we can do the math here, right? Let's just take the bid price, make it simple. 9.25 minus 9.12, right? That gives us a difference of 13 cents, okay? Times 100 to get one full contract. So it's $13 per contract. He lost $13 per contract times 30,000, and that gives us $390,000. That's what it comes out to me, that he lost $390,000 by exercising it early. Now, in the grand scheme of things, if your portfolio is worth hundreds of millions of dollars, maybe you don't care too much. It makes sense for him too. He just maybe cares more about the optics of things for him to exercise it. It really only makes sense to kind of exercise it almost the very last day. Or if your option is tremendously in the money and you're talking about maybe there's 5 cents of intrinsic value in there that the market is pricing in, and then maybe with the option commission, you're not really coming out ahead. But if, what was it? What did we talk about? We said 13 cents at least in this moment. Again, if you get the mid price, you maybe get an extra 2 cents there. You get 15 cents. It adds up, but whatever. He got out of this position. Once this was posted, we did see the stock initially rise, as we see on the chart right now. And then it pulled back everything, right? And now this is where we are at $28. Clearly, a lot of people are disappointed about it. Why did this happen? Let's discuss it. In my opinion, this is an example of simply where the tease has a bigger effect than the actual thing coming to fruition. Even in chess, they sometimes say that the threat of a move is more powerful than the move itself. And I think this was the case here. There was so much of an unknown, a cloud over what is going to happen with these options. Is he going to exercise them? Is he going to buy more? Will he sell them? How much are they going to go up in value? Like, people are always speculating about these options, right? But that's no longer on the table. The options are gone. The majority of his cash is gone. Everything's in shares, right? I mean, the best comment I read on Reddit, which kind of just encompassed all of this, was, so what now? So what now, right? What do you do now? His options clearly, the fact that he was active with options was driving a lot of interest in options from other people too. Even last night, even though last night we saw him selling options, people all over the internet were talking about the fact that he's selling his options to buy shorter date options, and that he's setting up his own gamma ramp because of this meme that says that he's going to do things on his own. Again, people going haywire of things, right? But that's no longer on the table. I mean, he didn't buy more options. He doesn't have much cash left for other options. He just has these shares now. He's a long-term shareholder at an average cost of, what do we have here at $23? So what are we looking forward to? What's the next catalyst? It doesn't help that the shareholder meeting was delayed today. I think it was pushed to tomorrow, and then they said, no, let's do it on Monday instead, if I'm not mistaken. So what's on the table now, right? And I think that's why things sold off, because people that got in, because they're trying to speculate, and they're like, listen, there's this big event coming up next Friday. I think it's going to blow up. If these options getting a lot of value, he might exercise, 6, 7, 8, 70,000 contracts and so forth. But that's all gone. That's all gone. And I think that's why we've seen this pullback in price, because people are just trying to understand, what do we look forward to now, right? Obviously, you look forward to the company doing well and fundamentally things improving, of course, but what about in terms of momentum, seizing on top of things? Alrighty, so getting through with all of that, let's briefly look at my positions, as I have done of every GME video of mine. And I know that, some of you are going to give me shit for this, but yeah, I am short GME at the moment, right? And I did add to my short position. I added to my short position actually after his Twitter post, when I interpreted the way I did, where I felt that, he was happy with the way the market absorbed things, because in my mind, it's like, okay, it is him further the proof, and the fact is that he's getting out of it. So added to my short position. You can see my short position right now. I have an average course of 30.29. Now I did add, I averaged, it's not like I'm averaging to a loser, right? What's it called? I shorted at a higher price, and I'm shorting at a little bit of a lower price. So it's not like I'm trying to, make up for the fact that I have losses in the position. We can see my trade right here, just 500 shares. I mean, my original position was, 2,500 shares, right? So I just added, 500 shares at 28.57. I think with the current market price, yeah, I'm up about 55 cents on these shares that I added. Still down on day altogether. I do have these other spreads that are on, which, these are more neutral. We've covered them in my previous 2 videos. Oh, excuse me. The calendar spread, again, I don't trust the quotes yet, because it's just not, it's not being quoted right, the legs. We'll have to wait about a week or two to really get an idea of what the P&L looks like on that. And the short straddle made a little bit of money today. Same thing. I mean, I'll just bring it up for a quick second, but this is what it looks like. If I put both of them on, again, it's not that directional. I mean, I would love for the price to be at $28 a month from now, right? That's where it earns. That's where it earns for me. But that's how my position looks like, right? I personally believe that we are going to sit in a range for some time now, from $20 to $30. I think that's a healthy range for GME until we see something from the company that says otherwise. And again, personally, if you watch my video from 2 days ago, I showed that I made 174,000 realized profits in GME. The majority of those profits were made being long. Okay, I'm not some guy that says perpetually short on GME. I need a reason to get long. Okay, right now this is not a reason for me to get long. Gill exercising his options and only having shares is not a reason for me to get long. It's just simply not. The price action forces me to get long. I will do just that. But right now I'm just not seeing that. So I'm going to remain short for the time being until we establish some sort of range and I get it. Okay, this is where we're going to rubber band from. I think his $23 average price will probably be some sort of anchor for people in the community to be like, well, if he's in at this price, I'm going to be buying more at this price. And I think that might be a bottom for the time being. People love to point out that there's so much cash that the company has, which is great. $4 billion in cash. It's just phenomenal. Do understand, though, it did come at a cost, right? So we can see the dilution over here on the chart, right? We've had 305, let's say, for the majority of the year. We pumped up to 426 from the two offerings, right? This is value that you lost from your shares, okay? If I crank the math here, what do I have here, right? So the shares lost about 34% in value. That's what everyone's shares have lost in the past month, 34% in value. Now, it's fine because even though your shares lost value, ownership in the company, the company itself went up in value, right? So it's actually a wash for the time being, right? Because the value that you got diluted by, that cash is still on their books. So everything is A-okay, We can look at the market cap here. Mid-April, GME was at $10, okay? Trading at $10, $3 billion market cap. It's a $12.4 billion market cap today, okay? So we're trading at 4 times greater market cap than we were back then. This is updated to today, by the way. 4 times greater market cap, but our stock price is under 3K, under 3 times higher, right? We're not 3 times higher than $10. We're just under $30, obviously. So even though the market cap is 4 times higher, we're trading for 3 times higher, and that is because of dilution, right? The company is bigger market cap wise now. What they do with the cash is going to be important. Worst case scenario, just showing it $4 billion, they say, hey, $4 billion, give it all to our executives, pull that out of the company. Well, guess what? That cash no longer exists on the books, so people got diluted for no reason. But if they take that money and they spend it wisely, buy a business or something, you can actually generate a return. And then all of a sudden, you get this extra boost on every share that exists right now. Because right now, I think if we could easily crank the math here where the $4 billion that they should have on their balance sheet after raising all that money and divide that by the amount of shares outstanding, 426 million, we get 9.31, okay? So every share has about a cash value of $9.38. I know some people on social media were calculating massive, cash values of $20, let's say, or 15 or something. That's because they were not considering the fact that in some places, the market caps were not updated. The shares outstanding were not updated. Right now, you get $9.38 per share. And we're trading at 3 times book value, if that's correct, right? So GameStop obviously clearly needs to do something with the money. It needs to do it smart. People say, well, they're going to earn interest of that money, and that's great and all, but there was no reason to have your shares diluted and have GameStop take that money then and invest it and get interest when you could have done it yourself, right? They're not earning some super duper 10% interest that don't have access to. You go into a money market fund and get 5% right now if you want to. So they got to do more of that money than just that. And that will obviously create value in the company. Clearly, I don't believe that there's going to be momentum moving forward to take GME to $40, $50, $60 until they announce maybe a very big buyout or something of some company that's when I can see the next catalyst for going higher. And they're positioned to do something like that. But I think in terms of the euphoria that we've seen as of late in the past month, I think that things are kind of dying down when it comes to that. We do have the shareholders meeting coming up on Monday. I think that will kind of be the last little catalyst. I don't really expect much to be mentioned in that. So brace yourself, that might be another leg lower after that shareholder meeting is over. People might buy into it expecting something to be announced. If nothing's announced, we're going to have another leg lower, and we'll create some sort of healthy range. I can see $23 to $30 GME until they start using that cash appropriately and well. And if there's any new developments, obviously keep you guys updated. I could also keep you guys updated on those two massive option positions that I have on. If I bring it up right now, yeah. So GME is it's hanging out $28 in the aftermarket. I mean, it's not the worst, right? We could still see prices move up higher tomorrow. But that's basically it. I mean, if you found the video helpful, if you want to ask a question, leave a comment. Please do so, like or dislike, depending how you take this video. But other than that, thank you so much for watching and have a great day.